Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everybody. Happy Tuesday, everybody. Where is my coffee? Here we go. Little cup of coffee today. This is for me practically a shot glass of coffee. So we're going. I'm trying to cut down a little bit. Usually the mugs are the size of my head. Trying with the a little bit less coffee. Been playing around with some nootropics in the morning. Let's see how that goes. So good to see everybody. Let's jump into the questions. We know what we're dealing with this morning. Is Santa here? This isn't Santa time, right? If you haven't had a chance yet to check out the free video from yesterday, from Monday, at the Simpler Trading YouTube channel, which is where I'm assuming most of you are at. I know some of you might be at my YouTube channel, but check out the Simpler Trading YouTube channel and you'll see the futures video where I actually kind of geeked out and talked about the calendar and the way in which what we're seeing right now, to what degree is it syncing up with the seasonal effect that we would typically see. So it's one thing to say Santa rally, that's a seasonal. It's one thing to say window dressing, that's psychology, that's seasonal. But are we really moving in tandem with that rhythm? So check that out. I think a lot of you who are wondering, does Santa show? And if he does, what are the signs? That video should be super helpful. All right, so let's jump right into the questions and kicking it off with Line Watcher. Good morning. With the future so strong, yeah, they're roaring, aren't they? And not only are they roaring, let's zoom in a little bit here. Look at the range we were stuck in. Look at the highs that we were dealing with. And we've taken out those highs. We've taken out the VWAP. We're going to re-anchor some VWAPs this morning in, what just happened here? Oh, my ad blocker just updated. Okay, inopportune time. Oh, those ad blockers are so helpful, aren't they? All right, so the breakout has taken us out of the range. That's a really big deal. And as we get above the VWAPs, and like I said, I'll be re-anchoring those. We'll keep an eye on if we can stabilize above these levels. So yeah, we know what we're dealing with this morning for sure. They're going to open above key resistance levels. I'm completely in agreement with you there, Line Watcher. So your questions about the Dow, that means we'll take a look at the YM. The YM is the trickiest of the three main indices because it's the one that is weighted with XLF and XLV and has probably the lead, although it's the number two weighted sector, but tech has to really work double time to pick this Dow up. Nonetheless, I don't want to short the Dow. So there was never a short here. I think throughout the time of these red grab candles heading down towards the 200, a lot of you knew, hey, Rog, we're heading down towards that 200, especially if you're in the mastery. Sector secrets folks know, futures folks know, we start getting near that simpler propulsion, those white dots, we're still north of the equator. We're still in the bullish hemisphere, if you will. And when the trend that preceded it was up, there's no short there. Not that that pinpoints this move higher, but it's actually pretty darn good if you take a look at the low on the first. So that's what I'm looking at, Line Watcher. All those tools that are already on the screen, nothing I have to do but interpret what they're telling me. Is it support? Am I still bullish? Do I want to buy support? Am I looking to buy through resistance? What isn't? I like to buy at exhaustion levels, at support levels. So are we going to see a gap fade? I don't ever presume that. If we're going to see a gap fade, the very last part of your question there, that's an intraday conversation. That for me takes me to a 5-minute, takes me to a 2-minute chart. This is a gap, though. It's also known as a true gap, where we've opened both above the high and the close of the previous session. But gap closes don't have to happen in the session of which the gap happened. It can happen later. But I won't presume, but what I will be looking for are V-score lows to potentially buy into. All right, next question. Ford. All right, let's go take a look at Ford. And double green, pullback buy in the wave. So this was definitely December 6th. So this is a Monday conversation where we're into the wave. So I will say, I know that it's difficult a lot of times to buy pullbacks. I know it doesn't feel necessarily like something that um, we should do, because then the question is always, well, in fairness, people always ask me, Rog, we get it, you buy the dips, right? And we get that you like the double green, which increases the probability of the dip buy following through. But how do you know the market is going to stop in your beloved wave? I don't. I only know that there's a probability that it will at the 21, at the 34 trio that I have in the wave. But at the same time, a lot of folks who don't like to buy the dip, the bearish momentum, they rather buy the bounce. That's perfectly fine. But we can pose the same question, can't we? We can say, well, how do we know it's going to keep going? We don't, right? So there's no right answer. There's no one group is wrong. It's just what resonates with you. The dip is always going to resonate more for me than the bounce. And the question can be asked of each group. How do you know it's going to stop there? I don't know, but that's the probability that I play. And on the flip side, buy the bouncers, which is fine too. How do you know it's going to keep going? We don't know, right? But both groups can say the same thing. The probability is it will. So you see, no one is wrong. It's just kind of where we are. So buy the dip was yesterday. Today, where do I think of Ford? The train left the station for me. Does that make sense, Victor? Great question. Tesla. Look, Tesla's been in fuego all year long, really, relative to a lot of the other symbols in the NAS, S&P, and even the XLY ETF. So as of just recently, with who's selling how many shares, and it's gone into a little bit of chop, Tesla should really be, in a huge way, a beneficiary of the window dressing. With what Tesla has done this year, think about it. How has it performed this year? Is there a portfolio manager alive who doesn't want to show that they don't have at least a decent, if not hefty, positioning in Tesla? I don't think there is. I think they're all going to want to show that, hey, yep, we're on it. We got it. That's the window dressing, isn't it? So I may not like the structure as much anymore, but it's absolutely viable. It's an oversold buy. So some folks might ask, okay, Rog, you've taught us that 2 red grab candles. We know what that means, the previous trend. Yellow JT multi. Notice that everything is color coded because I don't have ESP and I don't get tomorrow's newspaper today. All I can do is observe that there's a higher likelihood of follow through. So movement lower does not become, oh my gosh, we're going lower. Let's short this. As I like to remind everybody, I don't hate my money that much. But what I can do then is adjust. And that's really what is so important about the tools that are on this screen. How do you adapt? We all know, we've heard it in so many different ways. Adapt or die, right? Adapt or you will just lose out to the people who do. And, yesterday, who watched the football game yesterday? That was unbelievable weather. And you adapt. I mean, are you going to be able to kick long field goals with 45, 46 mile an hour wind gusts? I mean, it was just unbelievably cold. The weather was brutal. I think some of the guys had neoprene suits. Those of you that surf or dive, they had neoprene suits, from what I understand, underneath their jerseys to keep warm. All right, you adapt or die. You adapt to the weather. You adapt your game plan to just something that's not going to be passer friendly. Did the Patriots really win with a quarterback only throwing 2 for 3? That's adapting. Anyway, I'm a Pats fan. All right. So don't hold that against me, my non-Pats fans. But this is the adapting we have to do, right? Do I want to short? No, I'm going to adjust the tools that I'm using. If you're a simpler trading member, what is this here? My good friend, Mr. David Starr, this is ready, aim, fire territory. This is how do I understand what is oversold? How do I know when the market's exhausted to the lower end. If you don't have ready and fire, no worries. Go grab the Darvis tool, which is available free over at countdowntrader.com. Darvis 2.0, the original Darvis, is available over there. Those of you that are taking some of my classes, you know you have Darvis 3.0. You already have the signal here reminding you next time we get here, yep, that's oversold. That's support. And then if you want an indicator to sync up with that, way back when, early on in my career, I'd use a slow stochastic. So that's really lining up pretty nicely for what I would assume would be a window dressing beneficiary and a really nice choppy market adapt, right? Okay. Can the VIX get down to 22, 21? I don't know, my friend. Could it? It could, I guess. Ron, I'll tell you straight up. It's really important for people on this side of the mic to say sometimes, I don't know. A lot would hinge on that happening. It's possible. So what I would say is I'm trying to sort out what levels are reasonable. Well, the first thing I would tell you is let's start with 2471. Why would I pluck that out? Volume, right? The next level that I'll say you want 21. Well, you got the point of control down there. So it would be support. So all we can do, Ron, this is the way I look at the market. And this is everybody. This is how I look at the market. Every morning I get up, I make usually inordinate amounts of coffee, and I remind myself that I have no idea, neither does anybody else, where the market is going to go. I'm a batter at the plate. The pitcher is the market. I know they're going to throw a ball my way, hopefully over the plate in my zone, but I don't know what they're going to throw. I just know something's coming at me. Could be coming at my head. It could be in my zone. I have no idea what it's going to be. My job, our job, is to be able to recognize the pitch as quickly as possible and know if it's our pitch. So none of us know where the markets are going to go today. We don't know how the markets are going to end, but we do know as traders, if price reaches a certain level, what that means to us, and if there's anything we can do. So we're always in observing mode. And I think trading is really much more about counterpunching than it is clairvoyance, right? So the way that I'll look at this is that's a really cool level, Ron. I think that level would be very interesting. Whether or not that has gravitational pull, higher chance than not. So I'd say that 21.5 area, very interesting. But you know what we're going to need to see to get down there. Now, you might say, okay, Rog, I get it. Nobody knows. But what do you think? Well, if Santa's going to show up, and if you watch my free video from last night, you know that I think Santa's showing up. So that would actually mean the VIX would kind of be the Grinch in this scenario. So I think lower is probably more likely. Now, all that is barring Powell coming out or one of the Fed chuckleheads coming out and somehow already agitating a very active Fed fund futures contract that's saying, look, we're going to see rate hikes by June of next year. As long as that doesn't get any more, volatile, any more concerned that timeline isn't in any way truncated again, we should be fine. And I think that the VIX could drop. We end up with our window dressing end of year type behavior. So that's what we're dealing with right now. I think that's a far bigger problem of three, variant issues, federal government shutdown issues. That third issue, the taper's coming quicker tantrum, that was legit. And you could see the reverberations of that throughout the Fed fund futures contract as the rate hike expectation really zoomed in to June of next year. It might even get closer. We'll see. Keep this in mind, though. We have CPI data on Friday, one of the major macroeconomic pillars, one of the major mandates for the Federal Reserve. And we have JOLTS data, which is a jobs number, and jobs are the sort of second mandate. So we have two pretty big numbers coming out this week that could affect the way in which the market perceives if the Federal Reserve can legitimately start to tighten that timeline up any more than they already have implied that they might. All right, next up, good morning, Christian. For those of us who are newer to me, can I please give an overview of grab candles and what are the criteria that changes the color? Is it momentum-based, volume-based? So I'll tackle the first two first. Momentum-based, no. Volume-based, no. I have different tools for those two. So grab is an acronym for green, red, and blue. When you're a young trader sitting in your office talking to your dog and you're learning the ropes, no one ever tells you you're supposed to name your indicators after yourself. So I just called them green, red, and blue. Grab, neat little acronym. And that was, I guess I could have called them brag candles too, which would have been hilarious. So grab, it's just an acronym for the colors of the candles. And the criteria focuses on where they are in relation to the 34 EMA high and low. The close is in there too, but the high and low. For above the high, green. If we're below the low, red. For inside, blue. That's it. So where are the candles in relation to the 34 EMA high and 34 EMA low? Now, I know that's kind of a Cliff Notes version. Over at countdowntrader.com, my partner here in the office, Trish, has really curated and really compiled an unbelievable amount of information about the grab and the wave and a lot of other things. So Christian, I think, and that's a free site. Head on over. In fact, what I'll tell you to do if you want to is go to Google, the all-knowing, all-seeing Google, type in Countdown Trader, and then type in the topic you want to learn more about. Google will give you the links within the Countdown Trader that will take you right to those topics. So just go to Google. You know what? Hang on. Let me see if I can do that right now for you, Christian. So go Countdown Trader, right? And then just do grab candles, right? So just search it. And voila, there's one, finding the trend. And then we have a help doc over at Simpler Trading that explains some of these tools. And let's see, I think you'll find a lot of different indicators. This particular indicator, Christian, I've made this available since I created it. And you could probably find charts and updates that I wrote about grab and wave from quite literally 20 years ago. So do a little Googling and I think you'll get a lot more information, but that's the gist of it. Okay. It's all about what is the underlying environment. It's all rooted in my being unbelievably influenced, and I'm so grateful for it, by the work of Charles Dow early on in my career. So Jim says caffeinate and dominate. Yeah, I'm caffeinating, dominating, and I'm trying to remember which nootropic I took today. Oh, just supplements, just supplements, nothing crazy. But yeah, so we're trying some new stuff. Coop, what's my favorite? I've used Alpha Brain in the past. I've played around with Alpha Brain Black, which has a little bit of caffeine. I've played around with the folks at Neurohacker. Right now, I'm trying a month stack from the folks at BioOptimizers because I get my magnesium from them, and now I'm trying them out. So yeah, I'll let you know. I've been playing around with that stuff. That's definitely I love playing around with supplements. I'm a little bit of a supplement junkie. All right, next up is how would I trade the morning? I'll look for fades. I'll look for V-score lows, which is a volume-based support, and we'll look for the HPMR lows. We'll be doing that in the futures room here in about a minute. As far as TSM, hey there, Deborah, how are you? As far as TSM and MU, TSM, thanks but no thanks. MU, heck yeah. So TSM structurally, MU, AMD, let's throw AMD in there. Let's take a look at SMH. Let's take a look at IGV and look at where we have double green. AMD looks pretty good. MU looks even better, right? MU looks even better. So just know where we are within the timeline to earnings, but I do like MU better. Absolutely. All right. So next up is, Robert, same thing. I think AMD would be second to MU. And the last question here, MBC Derek, when do you roll? So roll dates, the roll date, or what I used to call the pit date. NBC, if you want, it's really easy. So here's the first thing from trader to trader, follow the volume and open interest. If you're looking longer term, follow the open interest. When that starts moving out to the next contract month, March, you want to move out. But if you're day trading, follow the volume. Go Google CME roll date, and you'll get the equity index roll dates right from the source, right? Jack right into the matrix there, and they'll give you all the dates. So Google CME, Chicago Mercantile Exchange, roll dates, and you'll get all the dates. But I'll tell you, longer term, follow the open interest. Shorter term, follow the volume. All right. As always, thanks so much for being here for Charts and Coffee. Paul, I appreciate that. As far as asset allocation, oh gosh, that's so much bigger a topic that we can cover here. We need to roll into capital and coffee, right? But yeah, maybe we'll do that sometime in an upcoming webinar or something. But yeah, that's a huge topic, and it's definitely not one size fits all. But thank you for the question. I think Trish and I have been talking more about maybe in the sector secrets mastery, trying to work that in a little bit more, because it is a big topic. Thank you so much. I'll see you all tomorrow, same time, same station. Be good to each other, gang.